I guess right after when I asked what you said is
Good morning. I hope everyone can hear me. Can you hear me?
Yes, we can.
Amos here.
We can hear you, Lillian, here.
Sorry.
Thank you. We are waiting for the
Gosh.
Thank you for your patience, ladies and gentlemen. The trustee, who's the chair of the meeting, is just joining. She was experiencing network issues, but she'll shortly join and will be good to go. Thank you very much.
Good morning, ladies and gentlemen. We can now begin the annual general meeting, the 13th general meeting for the Zimele Unit Trust Funds. Ladies and gentlemen, welcome to the 13th annual general meeting of the Zimele Unit Trust Funds. And on behalf of the Zimele Asset Management, it is my pleasure to welcome you to this annual general meeting. My name is Agatha Nduva, representing the corporate trustee and the moderator for this AGM. Please note that these proceedings are recorded for future reference and also for record purposes. We shall now commence the meeting with a word of prayer from Francis Sang.
Okay, let's pray. Father in heaven, thank you for this day. Thank you for all that you've done for us. I want to pray that you be with us through this meeting. Help us achieve the purpose of the meeting and help us generate decisions that will give us more opportunities going forward. We thank you for today. Guide us. In Jesus' name we pray. Amen.
Thank you, Francis. Esteemed unit holders, I hope you are all keeping well and safe in these unprecedented times, both in Kenya and globally. Since the outbreak of the COVID-19 in Kenya and its pandemic nature, the government has issued several protocols, including restrictions of movements and gatherings. The implication in the context of this meeting is that a physical meeting would not be possible, and as such, we have gotten a no approval from the Capital Markets Authority to hold this meeting virtually. We have ensured you have access to the information you require pertaining to the annual reports notice convening this meeting. I will now move to introduce the key stakeholders that are tuned in this meeting. Ladies and gentlemen, allow me to introduce Mr. Isaac Juguna, representing the fund manager and promoter of this, the Zimele Asset Management. We have Amos Ogwang, representing the fund custodian, Standard Chartered Bank. Dennis Paul, representing the auditors, Dennis Paul and Associates. We have Veronica Nyamweya, representing the regulator, Capital Markets Authority. And we have Laureen Rakiro, our AGM secretary from the CDS registrars. Moving on, we will now go to the next agenda, which will be constitution of this meeting. And at this point in time, I would like to invite the company secretary, Mr. James Kingara, to confirm that we have quorum before commencing the meeting.
Can you hear me?
Yes, we can hear you.
Quorum for the trust is 2 members. Thank you. And in that case, we could proceed. Thank you.
Confirm that we have quorum. present, I declare the meeting properly convened and constituted. And in the meeting, and this notice was emailed to all the unit holders and published on the company's website in accordance with the unit trust, with the trust deeds and rules. Mr. Kingara, please go ahead and read out the notice for this meeting.
Chair, if that is okay with you.
Okay. Yeah, the notice of the meeting is on the screen. It's projected on the screen, and therefore we will now move to the next item of the agenda, which will now be the minutes for the previous meeting. These minutes were also circulated way in advance. They have also been projected for ease of review. And now, so taking the minutes as read and even going through them as projected on the screen, we will now move to confirmation that the minutes were true proceedings of the previous meeting. May I now move to the confirmation of these minutes and request one of the unit holder to propose and a seconder. Members can propose or second by typing on the message icon on the portal. Can we have a proposer and a seconder? I confirm we have Nono proposing. Can we get a seconder? Members, please, can we have a seconder? For members who are present for the previous annual general meeting, we have Francis Nono proposing. Can we get a seconder? We have another seconder from Francis Sang. So we confirm, we now take the minutes we adopt the minutes and move on to the agenda of the next of our meeting, and that will be the annual reports. Ladies and gentlemen, the next item is to receive and consider the financial reports for the financial statements for the year ended 31st December 2019, together with the reports of the trustees and auditors. The annual report, which contains the details of these statements, was distributed in advance to the unit holders. I shall now request Dennis Paul, representing the auditor, to read the auditor's report on the financial statements for the year ended 31st December 2019. As we proceed as well, let us have
balance fund report of the unit holders for the year then ended 31st December 2019. Francis move to the auditor's report. Okay. The report of the independent auditors to the trustee of the Zimele Unit Trust Balance Fund for the year ended 31st December 2019. I'll read the opinion. We have audited the accompanying financial statements of the Zimele Unit Trust Fund set out on pages 10 to 19, which comprise the statement of comprehensive income statement of financial position as at 31st December 2019, statement of changes in equity, a statement of cash flows for the year then ended, and a summary of significant accounting policies and other explanatory notes. In our opinion, the accompanying financial statements of the fund are prepared in all material respect in accordance with international financial reporting standards and requirements of the Capital Market Authority. Our basis were we conducted our audit in accordance with the international standards of auditing. Our responsibility under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of our fund in accordance with the ethical requirements that are relevant to our audit of the financial statement in Kenya, and we have fulfilled our responsibility in accordance with these requirements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide basis of our opinion. On key audit matters, these matters are that in our professional judgment are of most significant in our audit of the consolidated financial statement. The key audit matters are selected from the matters communicated with the trustees, but are not intended to present in all matters what were discussed with them. Audit procedures relating to these matters were designed to the context of our audit of the consolidated financial statements as a whole. In our professional judgment, there were no key audit matters that were significant in the audit of the financial statement for the fund during the year ended 31st December 2019. The other details on the audit reports are about the responsibility of the management, the responsibility of the auditors. These will always remain the same. They don't really change, so we don't need to go to them in detail, but one can go through them. And therefore, can you move to the next page? Those ones will remain like that. The report was signed by Dennis Paul, member number 1921. Move to the notes affecting the financial statement. Move down a little. Again. There. Interest income, our interest income comprised of call account, investment in unit trust, and treasury board. Our total income, interest income for the year, 11,508,371. Capital gains on disposal of investment, 1,823,960. Unit trust investments, 17,466,513. A footnote: the money is invested in money market fund in accordance with the provisions of the Capital Market Act. Government securities, Kenyan Corporate Board, 12.5%, 69,994,200. Government bonds include treasury bonds and corporate debt. Quoted equities. Quoted equities comprise of commercial and services, express, commercial and services, KQ, banking, manufacturing and allied, energy and petroleum, telecommunication, a total of 49,600,129. Note 10, call and fixed deposits. Standard Chartered Bank call deposits, Standard Chartered Bank fixed deposits, total 28 million. Bank and cash balances, we have money instant, Standard Chartered Bank, Kenya Commercial Bank, Barclays Bank, Standard Chartered Bank, total 976,801. Receivables, dividend receivables, we have interest on core account, interest and from treasury bonds, 2,104,746. Note 13, payables and accruals. This is the money that we expect to pay to service providers as at the close of the year. Management fees payable, administration fees, trustee fees, audit fees, total payables 715. Sorry. Move to the comprehensive income. Move up to the comprehensive income. Up. That should be around page 7. There. Okay. We have read the notes affecting the financial statements, and therefore, this is the comprehensive income, the income and expenditure, and surplus or deficit realized. So we had read our income in the previous note. So our total income is 15,903,231. We have the following expenditure: management fees, 4,092,247, trustees fees 491,641, custody fees 589,838, CMA annual scheme fees 60,000, secretarial fees 69,245, administration fees 156,433, AGM fees 4,405, audit fee 46,400, newspaper publication expenses 57,994, 18,029 shillings. Therefore, total expenditure for the year was 5,586,239, and therefore we realized a net surplus of 10,390,999 for the year. Next page. This is the statement of financial position. We start with the non-current assets for unit trust investment. You note that the that I earned in the previous pages, 7,465,000. Government securities 994,200, potent equities 49,600,128 million. Our total non-current assets were government 60,842. Our current assets, bank and cash Foreign fixed 65,060,801. Receivables 2,104,746. Our total current assets 3,081,547. Our total assets, that is non-current assets combined with current assets, 168,042,390. Current liabilities 469,715. Our total net asset is total total assets less current liability 7,672,672,674 shillings. Above were financed by unit holders funds that are 6,292,740. Retained earnings reserve 153,133,727. Fair value investment reserve 21,753,793. Our net worth, that is members' net worth, 167,672,674 shillings. We have rendered the notes that affect the financial position. We have rendered our financial position for the year, that is the comprehensive income. We have also gone through the financial position, that is the net worth of the members as at the close of the year 2019. And therefore, to my best opinion, now we are through with the balance fund. So we can go through the money market fund now. This is the money market fund for the year ended 31st December 2019. We will use the same format of presentation, whereby we will start with the audit opinion. Oh, yeah. Francis, try to make it it's quite okay. Good. It's okay. Okay. A report of the independent auditors to the trustee of Zimele Unit Trust Money Market Fund for the year ended 31st December 2019. Opinion: we have audited the accompanying financial statement of Zimele Unit Trust Money Market Fund set out on pages 10 to 19, which comprise of the statement of comprehensive income, statement of financial position as at 31st December 2019, statement of changes in equity, and statement of cash flows of the year then ended, and a summary of significant accounting policies and other explanatory notes. In our opinion, the accompanying financial statements of the fund are prepared in all respects in accordance with the international financial reporting standards and the requirements of the Capital Market Authority. Basis of opinion: we conducted our audit in accordance with international standards on auditing. Our responsibility under those standards are further described in our audit responsibilities for the audit of the financial statement section of our report. We are independent of the fund in accordance with the ethical requirements that are relevant to our audit of the financial statements in Kenya, and we have fulfilled our other responsibilities in accordance with these requirements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis of our opinion. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significant in our audit of the financial statements. Key audit matters are selected from the matters communicated with the trustees, but are not intended to present all matters that were discussed with them. Our audit procedures relating to these matters were designed in the context of our audit of the financial statements as a whole. recoverability of bank balances held with Chase Bank Kenya Limited. As disclosed in note 8 of the financial statement, at the reporting date, the fund held deposit measured at shillings 25,362,414 included in this cash and demand deposit with SBM Bank Kenya Limited. These deposits were transferred from Chase Bank in receivership as part of transfer asset liabilities. Deposits amounting to 25,362,404 were retained by Chase Bank Limited in receivership, and recoverability is doubtful. The directors have exercised significant judgment and estimation as detailed while assessing the recoverability and measurement of these balances. Because of the significance of these judgments and the value of these balances at the reporting date, this is a key audit matter. The other is the responsibility of the management. That is their responsibility to prepare the financial statement in accordance with the requirements of CMA. The responsibility of the auditors, that is about the audit opinions. The dependency of the auditor. So those ones, we will not go through them in detail. We will go through the notes affecting the financial position. There we are. Correct. And we start with the interest income. We have three components here: interest from government bonds, interest from treasury bills, gain on sale of securities. Our total income for the year, 46,214,513. Interest from bank deposits, call deposits, raise credit loss, 24,305,012 shillings. Government securities, treasury bonds, and treasury bills, 531,440,038 shillings. Core and fixed deposits, we have the following components: from Equity Bank, NIC Bank, NCBA Bank, Cooperative Bank, Equity Bank, Chase Bank, SBM Bank, NCBM Bank. Our total figure for the year, 340,724,808. That is both core deposits and fixed deposits. Bank and cash balances: Standard Chartered Bank Securities, Kenya Commercial Bank, Barclays Bank, Standard Chartered Bank, Kenya Shillings, Standard Chartered Bank, Tanzania, KCB, total 33,489,191. Receivables, the money expected to be received: interest on core deposits, cumulative interest receivable, interest earned from treasury bills, 26,404,259. Payables and accruals, and expected to be paid to the service providers, trustees fees, 229,945. Audit fees, 189,120. Our total payables, 415,065 shillings. Move to the comprehensive income. Link page 9 or 10 there. Yeah, that's a pinch. This is a statement of comprehensive income. That is our income and expenditure and what we realize in terms of surplus or deficit. We have interest from government securities. You realize these are the notes that I have read, and we have interest on deposits. Our total income for the year, 70,519,524 shillings. Expenditure: We have bank charges, 221,678, newspaper publication fees, 301,939, management fees, 17,844,285, trustees fee, 2,035,699, custody fees, 3,321,877, CMA annual scheme fees 90,000, secretarial fees 79,656, audit fees 199,120, AGM fees expenses 25,595. Our total expenditure for the year 24,109,849, and therefore we realized a surplus of 46,409,675 compared to last year, that 4,903,158. Next page. The next page is the statement of financial position, or otherwise we used to call the balance sheet. We start with the non-current assets. All these are the notes that I had previously in detail, but now here they are brought together in a financial position. So government securities, call and fixed deposits, 872,164,846. The current assets, the bank and cash balances and receivables totaling to 59,893,450. Therefore, our total asset, that is non-current asset combined with current asset, 932,058,295. Current liabilities, payables and accruals, 415,065 shillings. Total net assets, that is total assets less current liabilities, 931,643,229. They were financed by unit holders funds, 650,198,640 shillings, retained earnings reserve, 281,444,589. Our members' net worth, 931,643,229. And that is the financial report of the financial position for the year 2019 as approved in the year 2020. So I have gone through the audit report and give our opinion. We have read the notes affecting financial position. We have read the comprehensive income, where we realize a surplus, and we have now finished with the financial position. And therefore, having presented the two reports, I think now we can adopt them. Thank you.
Thank you, Mr. Dennis, for that comprehensive report. We now go to the propose. We get a proposer and a seconder to adopt those financial statements. And even as we proceed, I'll encourage all of us to continue putting in our questions on the portal, on the message portal provided. We will be able to get back to you with the answers during the meeting. Can we have a proposer? Thank you, Wilfred Mudomi, for proposing. Can we get a seconder? Thank you, Dottie and Alphonse Ogutu for seconding. We now move to the next agenda, which will be presentations. Please continue typing in your questions. We will get to them after the presentations are done. And our next presentation will be the presentation of the fund manager. May I take this opportunity to now invite Mr. Isaac Juguna to carry on with the fund manager's presentation, representing the market and fund performance report, giving an overview and highlights over the last financial year and outlook for 2020. Mr. Isaac Juguna.
Hello, you can hear me?
Yes, we can hear you, Isaac.
Thank you, Chair, for this opportunity, and would like to also take this opportunity to greet all of the unit holders who are present with us. I'll just take you through the fund commentary, but before I do so, I would like to, for the members who are probably joining us for the first time, I would like to basically just highlight our role as fund manager, because we are making this fund commentary as the fund manager of the Zimele Unit Trust Funds. And our mandate essentially is to execute the investment strategy of the Zimele Unit Trust Funds in accordance with the Capital Markets Authority asset allocation guidelines and individual fund investment policies. Now, the asset allocation guidelines basically are basically just an outline of areas where we are not allowed to invest. So we are given various categories of areas where we can invest, and where we can invest is also dependent on the type of fund. So just also to brief you for the balanced fund, as you might have heard it being presented by the auditor, the balanced fund is essentially partially invested in shares of companies listed at the Nairobi Stock Exchange, and the other component is invested in fixed income securities. These are securities that bear interest. For the money market fund, which was also presented in detail by the auditor, the money market fund is primarily invested in interest earning securities. So for the money market fund, there's absolutely no component of shares, which makes it less risky, more stable. Our objective as far as executing this mandate is concerned is to ensure that we maintain the objectives within the two funds. For the balanced fund, it's essentially just ensuring that capital is preserved. There's also an element of capital appreciation, which primarily arises from the component invested in shares. For the money market fund, principal preservation or capital preservation and a regular income. So for the money market fund, essentially because it's earning interest, there's the expectation by members of receiving a regular income from us. Now, overall, the two factors that we basically we watch out all the time are risk management and liquidity management. Risk management in the sense that we should not take your investments, your hard-earned savings, and put them in risky investments where eventually the money is lost and everything has to be written off. On the other hand, liquidity management essentially means that when you, the investors or the unit holders, need some of your money or part of your money, we're able to pay this back to you in the shortest time possible, hopefully without having to draw into selling the assets to generate income to pay. So we're able to do this by just the income that is received from these funds, from the investments that are made and continue to monitor that over time. That notwithstanding, I would like to draw your attention to page 5 of each of the reports for the balance fund and for the money market fund. The fund manager's commentary is found on page 5. Now, I won't go into the details of that because the assumption here is that given that they've been in circulation now for close to 4 months, you have had time to go through them. It's not very, very lengthy. It's actually a very abridged version of the commentary. What we'd probably like to highlight is the environment prevailing in the year in question, that is 2019. In terms of the economic overview, the economy grew by about 5.4%, which was a reduction compared to 6.3% in prior year. And this primarily was because of weak demand arising from credit flow. And by credit flow, we mean that by and large, the government was borrowing more money compared to what was available to the private sector. And as a result of that, there was less money circulating. And of course, because companies were not able to access this money and households as well, as much as they could, it generally resulted in less activity. And we saw the outcome of this, which was basically companies not performing well by way of decline in sales, by way of decline in profits. Some even went ahead to make losses. And on the Nairobi Stock Securities Exchange, we even saw some certain companies getting into financial distress, having made losses for several consecutive periods and getting into positions of insolvency. And we even saw some companies being delisted, like River Mining, Beacons, Mumias, and not delisted, sorry, suspended from listing, like River Mining, Beacons, Mumias, and later on Kenya Airways and so forth. So the environment is generally not very promising from the equity side, which is shares at the Nairobi Securities Exchange. On the fixed income side or the interest rate side, the rates were generally on a downward trend compared to the prior year. And that was also primarily because government was essentially taking the bigger chunk of whatever credit was available in the market or the economy relative to what was available for the private sector. And again, because of the weakness of the economy or weakness in demand, banks were also not very, very eager to lend to corporates for the very reason that companies were getting into trouble, and that would have basically made it difficult for them to recover any loans that were made, especially to companies in risky areas. Now, overall, if you look at page 6 of both reports, page 6 will show you a table at the bottom there of investment performance. Now, over and above everything, our performance, our ability to execute the mandates that I mentioned earlier are basically revealed by the investment performance in each of the funds in question. Now, for the money market fund, there was a lot of stability, as you can see from 2016 to 2019. The fund has generally been stable within the just slightly below 10% interest rate level compared to the other benchmarks that you normally use, 91-day treasury bill, and inflation, of course. Inflation is really just to gauge that the money that you have entrusted us with is not losing value to inflation. So the same basket of goods that you're able to buy when you're giving this money, at worst, you should be able to buy the same basket of goods when we give you back the money, but preferably you should be able to buy an even bigger basket of goods based on favorable performance. On the balance fund side, as you can see there from that table, performance was actually very, very favorable, having clocked 21% for 2019 relative to the market indices for the NSE, 20 share index, which dropped by 11%, and the all share index, which went up by 2%. So overall, we were above the market indices, and that performance was essentially because of the shares of the companies that we held from the beginning of the year and additions during the year, and having experienced a lift in price towards the end of the year. Now, having said that, we don't focus very, very much on the past because, as you know, the past is the past, and from an investment point of view, what really matters is the current position and what we expect going forward. Now, as we are all aware, the current year is fraught with challenges. As the chair had highlighted at the beginning of the session, the bigger issue really is COVID-19 pandemic. And that essentially is the reason why we're having this unprecedented gathering online and all the other attendant challenges that COVID has presented. Now, from the investment point of view, COVID has actually hit the world in a very, very big way. And if I was to just give you an idea relative to Kenya, which we'll come to, when you look at performance of most of the countries out there, things have been worse than most people would have expected at the beginning of the year or towards the end of last year. And I would say Kenya, to a large extent, has been spared from this. And primarily, I think it's because of two reasons. One, because measures were put in place early enough by way of fiscal and monetary stimulus to cushion the economy from the adverse effects of COVID. And this was way back in March and April. March, April, and May. Very, very, a raft of measures was put in place. Of course, tax cuts and putting money into the economy by reducing the money that banks are allowed to hold at the central bank, reducing the cash ratio, the central bank rate, just to ensure that there's enough money for lending, and also that money is being lent at low rates. Now, as a result of that, just to give you an overview in terms of what prevailed here and what prevailed out there, first quarter of this year, the economy was able to grow by 4.9%, which was a drop from 5.5%, but from December or even from January, from first quarter of 2019. But considering the circumstances, I think the fact that we recorded positive growth is a very, very big, it's quite welcoming. Compared, if I was to share with you just a few of the economies that released their second quarter results, South Africa contracted. This is a negative growth rate of 51%. So you can imagine an economy shrinking by half in the first half of the year. The USA during the same period, 33% contraction. Japan, 28% contraction. China appears to be the only major economy that seems to have weathered COVID to a certain extent, grew by a positive 3%. So you can imagine we are doing close to 5%, while other countries are in serious decline. The other reason perhaps behind this is that Kenya did not rush to completely lock down the economy, as most of these countries did, and as now probably that they're starting to realize the consequences of that. And I would say, as a result of this, we are looking at, on the side of the fixed income side of the money market, in terms of interest rates, there's generally been a decline in interest rates since the beginning of the year or since the onset of COVID. And the main reason behind that is that the central bank gave banks back quite a chunk of money, about 36 billion shillings, which was part of the stimulus package. And this 36 billion shillings was actually supposed to be on lent to companies that needed this money for various reasons, so that they could weather and cushion themselves from the effects of COVID. Now, as a result of that, of course, lending was not very robust because for various reasons, some companies had closed down. Those that were seeking credit, not all of them were able to get it for various reasons, perhaps related to risk. And as a result of this, banks were primarily putting this money back in treasury bills and treasury bonds. And given that, the rates have been coming down slightly. But on the treasury bond side, in as much as rates have not come down so hard, there's an element of stability compared to prior years, and that's also where we have been putting some of our money in. On the side of equities, it's been a mixed bag of performance at the Nairobi Securities Exchange, but generally the trend has not been very, very favorable. COVID found an already weak corporate sector as far as the profitability was concerned or performance, and COVID basically accelerated or magnified this to the extent that companies basically continued laying off staff, cutting down operations, and some of them basically got into distress as well. So out of that, the NSE index has actually been dropping, all indices across the board. And as of yesterday, just to share with you, NSE 20 was down by 24%. NSE All Share Index was down by 4% compared to same period last year. Over the same period, the Zimele Balance Fund, which has been partly invested in shares, was up by 8%. Quite modest, but under the circumstances, I think it's quite favorable. And we think the strategy that we're taking for the balanced fund regarding the shares is that we are taking advantage and buying into companies that we consider to be bargains at this time, because generally low prices mean you'd find good companies trading at a discount. So there's need for caution. Not any company that has experienced a decline in price warrants investing in for various reasons which have become clear based on the prevailing circumstances. On the overall, going forward, we think, or rather the outlook is we haven't found, or rather a vaccine has not been found for COVID yet. So COVID will continue playing out. In as much as you've seen the situation tempering based on the tests that have been coming out and government reports, there's a general feeling that the situation is not as bad or dire as had been expected at the beginning of the pandemic. And hopefully, as we continue, it should just be an issue of managing it, with, of course, hoping that the same trend continues, that, infections, mortality rates, and so forth do not escalate from where they are. Now, the only condition, unfortunately, is as long as COVID prevails, the economy will continue to suffer. But of course, again, on the back of the various stimulus measures that have been put in place, these are expected to continue cushioning the economy moving forward. And as we highlighted earlier, that growth rate that was 4.9% in the first quarter, we think that in the second quarter and the rest of the year, we'll still probably end up in positive territory, regardless of what is playing out currently. For the very same reason that the economy was not totally shut down, as we've seen from advanced countries. And again, these various stimulus packages that were put in place should continue cushioning the economy moving forward. The only thing, I guess, in addition to COVID that is cause for concern is a recent forecast by the meteorology department that the short rains might not be sufficient or might be below average. Now, this doesn't augur very well, especially because the agricultural sector is the largest in the economy, about 34% of the overall economy, and it basically drives or sets the pace for the rest of the economy. So if COVID is already wreaking ravage on these other sectors, and agriculture also is affected by low rainfall, then over and above everything, 2020 is definitely not going to be a very, very pleasant year in terms of growth. But by and large, we feel as far as the funds performance is concerned, as far as the investment strategy is concerned, we do not expect a very, very drastic drop in performance compared to prior year. The only change we expect perhaps is on the balanced fund side, where the 21% return that was registered last year might be difficult to match this year. But nonetheless, because we are taking advantage of the prevailing prices, low prices, to invest more in equities of companies that we consider to be holding potential, we anticipate that 2021, when things start bouncing back, these companies are likely to go up in price, and that will reflect in their performance. But overall, we are optimistic that the situation will continue to be stable as far as the two investments where you put your money with us are concerned, and we will continue keeping our eye on the ball to ensure that overall we continue to deliver our mandate as provided to us by yourselves, and continue to ensure that your hard-earned money is put in good use. Thank you very much for that.
Thank you very much, Mr. Isaac, for that comprehensive presentation. May I now invite the custodian, Mr. Amos Ogwang, to give us the custodian report.
The correct figure is that 175,500. Unless maybe a different date had been picked or something. Usually you don't yeah.
Amos, please carry on.
Hello, can you hear me?
Yes, we can.
Anybody hear me? All right. Thank you. Sorry for that. Good morning, members. Amos Ogwang is my name, representing Standard Chartered Bank as a custodian. I'll take us briefly through the custody report as at December 31st for the Zimele Unit Trust. What I'll cover is the role of a custodian and the statutory obligations that we have as a custodian. So quickly moving then to the definition and the role of a custodian. What we do is our responsibility really is to safeguard your assets and the process and the setup which is put in place in terms of that safeguarding of the assets is in such a way that there is a legal setup and there's a global kind of setup that is put in place that can be able to safeguard the assets that we have in place. Number one is that a segregated, separate account is opened on behalf of the scheme. And this segregated account is really different from Zimele asset management account, if I may put it that way, in the sense that the assets which have already been placed in that account are assets which are already entrusted to members' member balances, and they are protected by law and by the setup which is in place. So in a nutshell, as I said, what we do is safekeeping of the assets, and number two, we do what you call investment administration and asset servicing, which is basically entailing the collection of dividend, shares, interest, and also advising on the corporate actions. One main differentiator in terms of the role of what we do versus the fund manager is that our work is really to protect your assets at all time, while the fund manager's role is to optimize the return. So what that means is that we do not make investment decisions on behalf of the account, but we do make decisions which will protect the scheme at all times. The next page is showing the services that we offer to the scheme, which is, as I mentioned, custody and safekeeping. We do trade settlements, receiving of contributions or receiving of your investments that come in on a daily, weekly, whichever period that they come in. We implement the investment decisions that have been made by the fund manager. And also we implement the payment instructions which have been given to us by the administrator. And then, as I mentioned, corporate actions, we offer banking facilities, as well as proxy voting to the scheme. Sorry. So also on the last part of it, which is access to offshore, by virtue of our presence not only in East Africa, but globally and the rest of Africa, it's an added value service that we offer to the client. In terms of our statutory obligation as a custodian, we are registered with RBA for the pension schemes and with CMA for the unit trust. We maintain, as I said, a segregated account where the funds are accredited into. And then we have to make sure that we report periodically, which is on a quarterly basis, to the trustees. And then to clients like today, which is an AGM, just report to give an overview of how the fund is faring on and where the funds are in investment and compliance with the same. For us to be able to do that, we have to keep a proper books of record for the fund, which really shows the portfolio that is held and the investment activities for the particular fund. And finally, we have to maintain a good system that should be able to assist in record retrieval in a timely manner and in a longer period when audit or any query is raised on behalf of the scheme. So that's in a nutshell what we do as a custodian. Mine is first of all to assure you that what the auditor has presented in terms of the figures is a confirmation from my side that that's what we are holding. And we continue holding that in trust on your behalf as members. The last two slides is really a small overview or challenge to members. We are all growing our investments, and you look at two things: how to protect, how to grow your investments in whichever way. And for you to be able to do that, to protect, save, and grow your investments, then there's a small process that we've put in place, which is really a life cycle, which you have to keep on looking at on a day-to-day basis to be able to achieve your financial goals. You protect your income, you have to project and budget, you assess the risk, and then keep in mind about the changing lifestyles and financial priorities. And then you define your priorities and goals to be able to achieve those financial goals that you want to undertake. So I'd like to stop at that point. Mine is to assure you that your assets are safe with us, and thank you for continuing to bank with us.
Thank you very much, Amos, for that comprehensive report. And I will now go to the trustee report, which I'll be giving to you at this point in time. I'd like to confirm that we are the corporate trustee of the Zimele Unit Trust Funds, which is an umbrella fund of comprising of the balance and money market funds. We work closely with the fund manager who supports the trustee in the investment decisions, and we as a trustee we take the overall responsibility for the fund performance. We work also with the custodian, and just to give the roles of the trustee. First is that we have the fiduciary responsibility, meaning that we are the legal owners of the funds, representing the unit trust interests. We execute the scheme documents. We ensure filing of regulatory returns. We also ensure that the proper books of accounts are kept. We go through the fund reconciliations just to make sure nothing jeopardizes the rights of the members and that of the sponsor. We also ensure that statutory meetings are held, and this is to confirm that the year under review, we had 4 meetings, and a 5th meeting was the annual general meeting. We do contract negotiations with service providers, and overall we enforce prudence in the fund's operations. Having said that, our comprehensive report on this financial statements is well documented in the financial statements that have been circulated. I will take that as read, and for me at this point is to confirm to the unit holders that 1, the operations of the funds for the year ended 31st December 2019 were carried out in line with the Collective Investment Schemes Regulation 2001, and 2, having made the assessment of the fund's ability to continue as a going concern, we the corporate trustee are not aware of any material uncertainties related to events or conditions that may cast doubt upon the fund's ability to continue as a going concern. So members, we thank you, and we promise we continue giving you a commitment to represent you as the best of our ability. Thank you very much. And now that marking the trustee report, we will now go to the next item of our agenda, which will be the Q&A. We have a question from Muthemi Gitonga that has been raised with regards to the money market fund on the call and fixed deposits that relate to Chase Bank and SBM Bank. would like to encourage, I would like to invite the fund manager to respond to this question.
Oh, hello. I hope you can hear me.
Yes, we can.
Okay, just to answer that question, note that is page 17, note 8, basically breaks down the call and fixed deposits. And the unit holder is asking about the third last row, which is showing Chase Bank at 25,36244, and immediately after that, SBM Bank 25,362,404. The two are actually separate amounts in the sense that the total amount that had been placed in Chase Bank, which was just around 100 million shillings, after Chase Bank was placed in under receivership, and subsequently was the assets were taken over by SBM Bank. There's a component about 3/4 of what was owed to deposit holders were transferred to SBM Bank. So the 25 million shillings that you're seeing there is part of that 3/4 that was transferred to SBM Bank. A certain portion was available for access by deposit holders almost immediately. And then 2 tranches were available in subsequent periods, one after 2 years and another after 3 years. I would like to inform you that we were able to access the first tranche that was available immediately, which was subsequently received by our custodian. The second tranche, the 2-year tranche, was received last week. And now the only amount that is left in this SBM Bank amount, we expect to receive that next year. So the only amount that will be left is the 25 million in Chase Bank, which is in receivership. And this, if you remember from the auditor's report earlier on, this is the key audit matter that they were raising, and they were asking, or rather they were questioning about its recoverability. Now, to the extent that, or rather to the information that is available to us up to date, so far no communication has been made, at least in the last 2 years, by the CBK regarding additional efforts to recover the 1/4 of the total deposits that are still in Chase Bank. However, as a result of that, it was deemed to be prudent, especially in line with the accounting standard IFRS 9, to start providing for these 25 million going forward. And the agreement is that we should provide for it over a 5-year period, so that after 5 years we'll have written off the amount in totality. But then again, it's also important to inform members that that doesn't mean that we are saying that this amount will never be recovered. If for any reason efforts, the Kenya Deposit Insurance Corporation is able to recover part or all of these 25 million from Chase Bank, then the amounts that will have been written off will actually be written back, and everything will be okay. Also, to inform members that subsequent to this, one of the policies that we came up with as a fund is that we made it a policy that would be only investing the funds or the deposits of the fund in Tier 1 banks, basically the bigger banks, just to avoid any similar occurrences into the future. But I hope that answers your question.
Thank you very much, Isaac. There is also a question that has been raised in regards to the management fees, raising from, an increase of the management fees from 15 million to 17 million. Would you like to take that up as well?
Now, that I would like to draw members to page, just a minute, that would be page 10 in the financial statements of the money market fund. And you can see on the expenditure side, the third row, management fees, current year 2019, there's 17.8 million shillings. And prior year, sorry, Francis, I guess you can take us there so that we are all conversant with what we are discussing. That's a page. Exactly, that's a place. So if you can see on the third row, the third expenditure item is management fees, which as you can see is rising from 15.7 million to 17.8 million. Now this is really the fees which are paid to the fund manager at Zimele Asset Management. And the increase was 13%. Now the increase in 13% is because fund management fees are paid as a percentage of the size of the fund. And the rate at which the fund is paid, or rather the rate of management fees, is 2% of the total size of funds, technically called the net asset value, or the total assets less any liabilities. Now, if you go to, just to give you reference, if you go to page 11 of the same financial statement, you will see there at the very bottom, members' net worth, which is really the total net assets. You can see on the asset side, there's what is called total net assets, 931 million, financed by the members' net worth, a similar figure for balancing for 931. Now, if you look at the growth from 2018 to 2019, it's the fund size is moving from 812 million to 931 million, which in essence is a 31% increase. Now, if you take this fee on the expenditure side of 17.8 million as a percentage of the 931 million asset size in the balance sheet, it actually gives you a rate of 1.92%. Prior year on the same gives you a rate of 1.93%. Now, it might not be exactly 2%, which is really the contractual obligation, but because the fund size will differ on a month-on-month, on a day-on-day basis. But as you can see, whatever the fund manager billed was way within the 2% that is contractual according to the service agreement. Thank you.
Thank you very much, Isaac. I see further to the earlier question, Mary Kwamboka also raises a question on the issue of recoverability of the money that has been trapped in Chase, and that has been captured a bit by Isaac in his explanation. However, just to add on to that, we are still waiting for further directions from KDCI and CBK on how this is going to be treated, and and also further guidance from the regulator, Capital Markets Authority. And this is going to be an issue that will be continuously be updated, that shall continuously update you on what will be the way forward. As at now, we cannot fully say that the amount cannot be fully recovered because we've not gotten the final resolutions from the regulatory authorities. And that marks the end of our Q&A, as we do not have any further questions that have been presented to us. And now that will lead us to the next section of this meeting, which will be any other business. However, should there arise any questions, please continue posting them. We will get back to you and post the answers and responses to this particular, or to the responses to your questions on the company website within 24 hours after this meeting. As we do not have as we have not received due notice of any other ordinary business, or special resolutions, we accordingly come to an end of our formal business. At this point in time, I would like to invite Francis Sang to give vote of thanks and final remarks as we conclude the meeting.
Thank you, Agatha. I'd like to give the vote of thanks, the esteemed unit holders, the Capital Markets Authority representative, the fund service providers, the CDSC who've enabled us to use their platform to hold this AGM. I have to mention our deep sense of appreciation to everyone for taking time to attend this AGM and for being able to work as a team towards the success of the running of this fund. I hope that we'll continue moving forward and being proactive in giving solutions and helping in the running of the fund. I'd like to thank the service providers for being proactive in holding the meetings, the trustee, the custodian, the fund manager, the company secretary, the regulator for guiding us well while we are making investments that are safe to the shareholders. So as we go forward, let's move on with the same spirit, and money well saved is money well spent. Thank you.
Thank you very much, Francis. That, ladies and gentlemen, concludes the business of the meeting. I thank you for your attendance and wish you a good day.